Welcome back to LedgerShift AI. For years, preparing financial statements has always been this super manual, painstaking process. But that's all changing, and fast. We're seeing this massive shift that's taking finance out of the digital age and straight into the AI age. So how is this revolution happening? Well, we're about to break down exactly how AI is transforming the three core financial statements, one by one. Here's a quote we can relate to. The dry eyes. The endless copy-pasting from some dense PDF into a spreadsheet. It's the sheer drudgery of reporting. You'd spend hours, sometimes days, just on manual data entry before you could even begin the real analysis. And this right here is the exact problem that AI is now starting to solve, which is not some pie-in-the-sky idea for the future. A global study by KPMG found that almost three-quarters of companies are already piloting or actively using AI in their financial reporting. This isn't just a trend anymore. It's a fundamental shift. The age of AI in finance is officially here. This transition is absolutely fundamental. We're not just talking about getting faster spreadsheets, but being more productive. We're talking about intelligent systems that can automate, analyze, and even interpret financial data with incredible speed and precision. So how does this new AI-powered approach actually change the big three financial statements? Let's dive in and take a look at each one, starting with the story of a company's performance. The income statement. The income statement is what tells the story of how a company is performing over a specific period of time. The best way to think about the income statement is to think of it as a well-scripted movie. It has a clear beginning and end, say a quarter or a year, and it follows all the drama of every dollar earned and every dollar spent, all leading up to that final scene, the bottom line. So how does AI rewrite the script for this movie? Well, it starts by automating the really challenging seams. It can handle complex revenue recognition standards automatically. It intelligently categorizes thousands of expenses, not just by looking at a merchant's name, but by actually analyzing the line items. And maybe the coolest part is that it uses something called natural language generation to turn raw numbers into readable summaries, and even flag anomalies, like a sudden 30% jump in operating costs that a human might have easily missed. And this is that natural language generation in action. It's like having a translator that turns the language of numbers into the language of business strategy. It's not just data anymore, it's a story. The system doesn't just tell you what happened, it starts to give you the context for why it happened. Okay, so we've covered the movie. Now let's switch gears from the movie to the photograph. Let's talk about the balance sheet. Yep, the photograph. The balance sheet is a single static snapshot of a company's financial health on one specific day. It answers those three fundamental questions. What do we own? What do we owe? And what's left over for the owners? Now, traditionally, taking this photograph would involve a total mad dash at the end of the month, right? But AI turns that entire process from a frantic, periodic, and chaotic event into a continuous live stream. You have AI agents working around the clock, 24/7, reconciling accounts, flagging exceptions, and even calculating depreciation with perfect accuracy. All of a sudden, the balance sheet isn't just a historical document anymore. It's a living, breathing dashboard of the company's financial health in real time. All right, finally, let's get into the one that's often the trickiest, the most labor-intensive statement of them all, the statement of cash flows. You see, inside most companies, there is always this constant tug-of-war going on here. The Treasury team tends to love the direct method because it tracks every single dollar coming in and going out. But the accounting team needs to utilize the indirect method, which starts with net income, to stay compliant with standards. And trying to do both manually has always been a complete nightmare. This is where AI steps in and basically becomes the perfect mediator. By connecting directly to bank accounts, AI can pull in raw data and uses machine learning to automatically categorize every single transaction. This means it can generate a real-time direct method statement for Treasury, while at the exact same time doing all the reconciliations. The final result? Total harmony. Both teams get exactly what they need without the struggle. And when you take this AI power and apply it to forecasting, well, the difference is just night and day. Compared to the old manual ways, AI-powered forecasting can cut errors by up to 50%. It updates in real time instead of monthly or quarterly, and it pulls data from everywhere, including your ERP, your CRM, and market data. AI is a total game changer, moving from reactive to proactive financial management. Okay, so with AI doing all this heavy lifting, you got to ask the big question, right? What about the people in finance? Does the machine just take over? Well, the research overwhelmingly says no. In fact, it's the opposite. It elevates the accountant. Due to the human element, AI will never replace your financial leaders. It strengthens their role. By taking over all that tedious, repetitive work, it frees up that invaluable human brain power to focus on much higher level strategic thinking. Think about this. AI allows accountants to shift from being purely transactional to becoming strategic advisors. It's a move from being a scorekeeper who just tallies up the numbers to being a strategic player in the game, someone who uses those numbers to actually drive the business forward. So the new model is really this powerful partnership. AI handles the high volume data crunching with a speed and accuracy that, let's be honest, humans just can't match. But humans provide the intangibles AI can't: the strategic context, the deep industry knowledge, and the critical judgment. So let's pull all this together. What does this really mean for the future of financial reporting? 99% of companies are moving to AI financial reporting within 3 years. It's no longer if, but when. And that when is right now. Month-end close is transforming from weeks to days. With error rates slashed by 60%, AI delivers faster, more reliable insights for everyone. Redefine your strategy and create new value through the ultimate partnership of human ingenuity and AI. As AI masters the numbers, our new job is mastering the why. Legishift AI can help with that. Thanks for watching.